here because there's a bit of a poll in the live chat going on. Which ETF has the best ticker symbol on the ASX? Now, I've given 4 options. ACDC, obviously the Australian connection, also a connection to energy. HACK, HACK. And then we've got MOAT, MOAT. I can see 14% have chosen that. And VDHG. Why? Because I ran out of options. So I just went with VDHG as number 4. So if you can get your guess in, tell us which ETF you think has the most creative ticker symbol on the ASX. Of course, I'm Owen Rask. Thanks for joining me. It's always a pleasure to be with you every Wednesday night at 6 p.m. Tonight is a very special episode. I say that most weeks, but this week I mean it because we've got Kanish Chugh from Global X ETFs joining us on the program. I'm also joined behind the keyboard by Alex from Selfwealth. So if you see Selfwealth in the live chat, it's either me or Alex. We'll be sharing some polls and just curating the live experience for everyone. So if you are hearing me loud and clear, please say g'day. Drop me a comment to say, yes, Owen, I can hear you. You are not talking to yourself, as I tend to do quite frequently. I can see Caroline, Jason, Akadaka, is this, have you been here in a little while? Have we missed you for a little while? Because I feel like it's been a while since I've seen your name flash up in the live chat. And as Caroline says, very fitting name. Stevie, welcome. Martin, JJ, everyone, welcome. Stuart, thanks for saying you can hear me. Danica, it's always a pleasure, guys. So rather than start with the top 5 most sold, top 5 most bought, I figure we'll jump into the conversation with Kanish because I know this is actually, this is crowdsourced material as it comes to investing. We're talking about something that everyone has basically said, you've got to talk about this. It's an important trend for a lot of people, and lithium and just renewable energy, battery technologies, energy storage. Obviously, we've just seen an explosion of electric vehicles. We've seen everything in our smartphones and our watches. Everything needs to store energy. And overseas, at the moment, we're seeing energy prices going through the roof. People are telling us how good their solar panels are on their roofs. And, the rest of us feel a little bit left out. So, Caroline, no joke tonight. Please, I didn't have time to prepare a joke tonight. So if you have one, I'm putting you on the spot here, Caroline. But if you do have one, please let me know. One of my favorite jokes, which I can bring up offhand because it happens so often, is what's the definition of a long-term investment? And the answer is a short-term investment gone wrong. So that is the joke that I always bring up when I'm lost for jokes. So it's not talking to yourself, it's seeking expert advice. I like it, Colin. Thank you. Maybe, some of my best ideas come in the shower when I'm by myself. So maybe that's where, the expert speaks and I listen. Stuart, that's the Sydney Swans grand final performance was a joke. Now that I think it's a bit too soon for that, Stuart. It was pretty hard for those of us who follow the AFL. It was a pretty tough day out for Sydney Swans, it's fair to say. Maniac, you said you picked ACDC in the poll, but you have HACK in your portfolio. Okay. Well, we can dive into that tonight if you have any questions on that. G'day, Paul. Welcome to the show. But before I ramble for too long, I'm going to welcome to the show Kanish Chugh. Kanish has joined me on many different mediums over the years. I've spoken to him quite a lot. We recently did a masterclass together where we talked about commodities. He's a frequent guest on the Australian Investors Podcast, the podcast that I host. And he's the head of distribution at Global X ETFs. And if you don't know who Global X ETFs is, don't worry. We're going to get to that tonight because it's kind of like a big thing that's changing here in the Australian ETF industry. So I might, without further ado, welcome Kanish to the show and I'll bring him into the chat. And here we go. Kanish, welcome to Selfwealth Live, mate.
Thank you for having me.
I must admit, I was saying off air before with Alex that I do love the new outfit that Global X has kindly bestowed on your shoulders there. Mate, just to set the scene here, I think a lot of people are thinking, okay, Global X, this is new to me. What is the name? tell us a little bit about this, because weren't you at ETF Securities? Like, people are trying to piece things together. Tell us a little bit about what's going on and the name behind the jacket, I guess.
Yeah, definitely. So obviously, we've been on, as you mentioned, many different mediums before we've spoken, but previously as ETF Securities. And for those that aren't aware, in June of this year, ETF Securities was acquired by Global X and their parent Mirai Asset, who are the first and largest Korean fund manager. So again, some names there that people wouldn't be aware of. And they are global players in the asset management world, and Global X is actually a global player in the ETF world, and most well known in the US. And yeah, you've got the website up there at the moment. But for those that aren't aware of who Global X are, and Global X was founded in 2008, and it was founded off the back of essentially listening and wanting to empower clients to invest in solutions that were generally unexplored and intelligent solutions. So a very similar mantra to what ETF Securities was here in Australia. But what Global X has done over the past number of years, they've grown their product range out to about 80 products. They're in many different countries now, across Europe, Latin America, Asia Pacific. And through the acquisition of ETF Securities in June, we recently rebranded ETF Securities to being Global X. So all of our funds that ETF Securities had, there were 23 funds that we had. We managed just under $5 billion. The team, the products have all remained. Everything stays the same. Simply the name has changed. So ACDC, that ETF that we've run for the past 5 years now, that product is still one of the biggest thematic ETFs in the market. That is still there available for investors to give them exposure to that battery technology thing. But the only difference being is that instead of being ETFS, it's now Global X. And I think people will start to realize Global X as a bigger player in the ETF market in Australia. Also with around sort of the three pillars of how we look at it, being thematics, income, and commodities. And fundamentally, and this is probably one of the greatest synergies that I found after talking from within Global X, is that what we can see there is that research is at the foundation of things. It's the foundation of product development.
I when I read of the acquisition that was being announced, obviously our relationship goes back quite a while, but when I remember reading about it, I immediately looked up who Global X was in the US and saw a pretty extensive research team, which is really important for me as someone who invests. I want to make sure that the ETF provider has research capabilities in-house, because I want to make sure the products are well thought out, and all of the different, I guess, products that you're bringing to market, mate, are indeed well researched, fundamentally driven, and it's not just like pure marketing. So absolutely everything that you just said there makes sense to me. One of the things that I brought up with you recently, and only people who follow Rask quite closely or follow you quite closely would probably have heard this, but one of the things that you said to me recently was your best ever investment was gold, or is gold. And I was taken aback by that. When I asked you, I thought to myself, there's no way he's going to say gold or something like this. So is it still the case that gold is your best performing investment?
Well, I wouldn't say it's my best performing investment currently. Obviously, we've seen a bit of a depression in the gold price over the past few weeks. But what I would say over the long term, gold has been one of my best investments, purely because obviously I am going to be biased. Obviously, ETF Securities / now Global X, from an Australian perspective, we had the world's first gold fund, GOLD. So I'm well versed in understanding the investment thesis around why gold should sit in a portfolio. Gold is a stabilizer. It's portfolio insurance. So when we spoke, I think it was 2 months ago from memory, or even 6 weeks ago, that at that time, with where markets were going, with the volatility of markets, and that hasn't stopped, to be fair, but gold was really stabilizing my portfolio. And I hold it within my SMSF. And for me, that has rung true. Yes, we've seen a little bit of depression in price in gold, but we've also seen broad equity markets dropped to, significant lows. So gold is still, for me, a really well-used portfolio insurance. It's a well-used diversifier, and that's what it's there for. Does it have a long-term view? From my side, it does. It will always be a core holding in terms of being that in that alternates bucket. So, when we think about alternate, from a defensive alternative, that's how I see gold being used. But interestingly, in terms of best performing investments so far this year, it's actually been an emerging market ETF. And again, it's one of our own that I hold. It's a NDIA.
Right.
So gold is still one of my best investments and will be. I think I won't. I'm a bit of a gold bug, but India so far this year has been a bit of a standout when you look at it compared to other broad markets. India has been, people call it the elephant of the emerging market space because it's the largest democracy. It is a consumption story. You are talking about, that is what the investments story behind India is. This growing middle class, this consumption story. I think there was a stat that was once said, which was about 250 million people within India don't use conventional toothpaste. It's not saying that they don't brush their teeth with natural toothpaste, for example, but conventional toothpaste in the way in which you and I might buy Colgate or etc. That is a big market. It's a big opportunity then for the likes of Unilever or Colgate, etc., to enter India and to really try and educate clients and tap into that. So for me, NDIA is the ETF that I've used there. It's the top 50 largest companies within the Indian market, and it's been a good product or good exposure so far from a performance side.
Yeah, there's only two India ETFs on the market, and I get a lot of questions about this. And it's a really interesting play. I think for global emerging market or just emerging markets, I do prefer the kind of like the targeted exposure. Some of the mass market emerging markets, you end up with some geographies you don't really want in there. So I think we've spoken about that previously, but I didn't expect you to say. I'm half expecting you to say, yeah, I bought some speculative stock and it just happened to go up 200% and then I sold it. I figure you've been doing it so long. So if you're wondering why your gold ETF, GOLD, has all of a sudden gone from ETFs to Global X, that's why it's the same team. It's just a bigger team now, global team. So it's great to see, and that's the explanation. There was a joke that did come through from Eve, all tongue in cheek, says, "What's the biggest difference between men and investment bonds? Bonds mature." I think that's quite a joke. It probably applies to me too, Eve. So I'm not going to lie. Okay, so mate, one of the things that we really wanted to talk about, and the community is really hot on this at the moment, is basically lithium. I think we've spoken once or twice in passing about this as an interesting thematic, but when we talk, I reached out to a few CEOs on this topic as well, and I thought, given the ACDC ETF that you provide, I know you're well versed at talking about the lithium supply chain, about how you went about creating the structure to get people exposed to lithium. But maybe we can just talk about the market writ large. Like, how big is this in terms of an addressable market? And maybe in answering that, you can just explain the use cases for lithium. I think a lot of people kind of get it, but maybe just like the 101 there would be really helpful.
Yeah, sure. So I'll put some numbers to you first. In 2020, the lithium mining market was roughly around $2.7 billion US dollars in terms of that size. By 2028, it was expected to be about 8.2 billion. So that's at a sort of compounded growth of about 15%, just under 15%. That's the lithium mining market. When you look at it from the perspective of the global lithium-ion battery market, in 2020, that was expected to be size about 53 billion US dollars, and by 2028, it would be about 217 billion US dollars. So that's again a compounded growth rate of about 19%. So that's only from 2020 to 2028. Now, again, we're taking numbers that were from 2 years ago. 2020, obviously there was that period of COVID. There's also been a big explosion of policies. So one thing to note, whenever we talk about megatrends, you talk about thematics. One of the key drivers of a thematic or a long-term megatrend is government support. Without government support, you're not going to have that structural shift. And so that structural shift has started to occur within the electric vehicle space and the conversion in using battery technology in terms of cars. But that's because we've had greater governments around the world start to implement emission standards, start to implement policies around the phasing out of combustion engine vehicles, internal combustion engine vehicles, or petrol vehicles and diesel vehicles. And so you have that shift occurring. So then the government start to come on board, they start to implement policies, they implement incentives for consumers to start to look at electric vehicles, and then corporations start to look at it and go, okay, we're going to start to tackle some of these regions more aggressively to try and obtain market share. So I think within that explains some of those growth rates in terms of what the lithium mining market and what the total lithium-ion battery market could look like. So, it's going to potentially be 4 times the size from 2020 to 2028 in terms of lithium mining, and nearly about 4 times the size in terms of that battery market as well. But I guess to take a step back, so that's just some stats out there. But sorry, mate, you.
No, I was just going to say, no, it's like a really fast growing industry, obviously, and there are multiple facets. Unlike some other thematics, it seems like, with some thematics, it's just like there's one thing that we do, but with this, there's like you can take the mining approach, the battery storage and the distribution and all different facets of it, right?
Yeah, and I think that's a key part there is that people sometimes think thematic ETFs are disruptive tech, and they are disruptive tech. But when you actually pull the hood open and you look down in the portfolio, you actually start to get a sense of, well, I'm getting exposure to more than just technology companies. You're getting exposure, and we'll talk about this soon, but you get exposure to that complete value chain. So how we look at the battery tech world is we look at it from the miners, the mining of lithium specifically, and battery grade lithium. And I guess for those that aren't aware, what is lithium? And we probably should explain that. I think that's probably a key component of this discussion. Essentially, lithium is the lightest metal on Earth. So for many people, they actually called it the white petroleum. And that's mainly because of its color, and the common usage is in sort of batteries, whether it's batteries, and traditionally before electric vehicles, these were batteries that were powering your Walkmans, your phones, your laptops, etc. We have been using lithium batteries for the past 30, 40 years. And so they've been commonplace for all of us, but we probably weren't as aware of them, and the demand was not there as well. I think a key part there has also been the fact that traditional demand for lithium specifically has been very industrial. So lithium is also used in things like glass. It's being used in manufacturing of semiconductor chips and other areas. But more and more, its demand is going to be very much battery focused. So I think there is an expectation by 2030 that about 90% of lithium demand will come from the battery segment. So that's the sort of the concept that lithium, it's been it's a very common resource for many people, for countries to have access to. And interestingly, more than 50% of lithium can be found in South America. So Australia ranks, I think it's number 4 or number 5 in terms of lithium reserves. But what is interestingly, and I found this really interesting when I was looking at the stats preparing for today, and I want to make sure I get it right, but in 2021, Australia was the largest producer of lithium from a mining perspective. Second place was Chile, and in terms of second place, Australia was nearly double that of Chile, and then it was nearly 3 times or more than 3 times that of the third place as well. So you get this perspective of lithium is all around us. There are different types of lithium, and the 2 main sources are either brine or hard rock. And essentially, to put that in perspective, brine is found in salt lakes, and that's where majority is found from South America. And the hard rock lithium is what Australia generally has. And so from that perspective, that actually takes 3 to 4 years of capital expenditure prior to production to get to an average mine life of about 16 years. So you get this perspective of, there's a lot that goes into producing the hard rock lithium, but that's actually the highest grade lithium as well. And that's why you generally find, from an Australian perspective, we're very well placed in terms of supporting this big growing demand in terms of electric vehicles. So Tesla, for example, is currently sourcing its lithium from Australia.
I'm really glad you introduced the difference between the two. I was watching a Bloomberg quick take earlier on today about some of the big lakes in South America and in Chile. It's actually a sight to behold. If you have a chance, and after you're done with Selfwealth Live, of course, just jump across and just search for lithium mines Chile, and it'll come up with the images and videos that show you how big these things are. And one of the things that I learned today is about a teaspoon is in my iPhone. So that just gives people a sense of how much goes into it. Whereas a fully electric vehicle could have, like a 2 or 4 liters of milk. Imagine that in a carton. That's that amount of lithium in a car. So I thought that was just really interesting in terms of that. It's all around us now. It's like even in this watch, right? So it's easy to see why people are like falling over themselves, and investors are too. Just so you know, Paul just did say in the comments, Kanish, that you mentioned a Walkman, which may have dated yourself just a touch there.
That's all right. Yeah.
And Jeremy said,
I did also have an MD player and an MP3 player, but that's okay.
Okay, we don't need to. We won't go too far down memory lane. It's not. Well, I think MP3 was later than Walkman, so it's not too bad. Jeremy says, like rare earth metals, this advice is gold. So I will get to some of the questions that have come through, which are fantastic. I can see a few already. I can see, Teddy, you did ask about Sayona Mining, which is a $1.9 billion company exposed to lithium. If you go to and I'll bring this up in a minute when I ask Kanish about portfolio construction, but if you go to the Global X website, you will see a lot of the companies in there are massive companies. They're not necessarily smaller businesses. So maybe while we're here, why don't we just segue straight to this, Kanish, which is who are the major players as you think about it in the lithium market? Even if you just want to talk generally, obviously we know Tesla because they're everywhere on the streets these days. But yeah, I guess how do you frame this? How do you think about it? And then maybe we can go into portfolio construction and whatever.
Yeah, sure. So okay, the best way to think about it from our perspective is we don't look at it specifically at just the mining section. So what we wanted to look at when the ETF was developed was to look at the complete value chain. So what we mean by that is and it is a battery tech ETF and lithium mining ETF. So this is something to be considerate of. Everyone talks about lithium. And by the way, the reason why everyone talks about lithium ion is because of the ability for it to be relatively lightweight, but provide a really high initial instant charge and an instant sort of power surge. So if people the best way to think about it is the Tesla in the ludicrous mode, the ability for that to go 0 to 100 in under 2 seconds or 2.5 seconds or whatever the crazy number is. That's what a lithium ion battery can produce. But the battery technology market is more than lithium. But the way in which we've thought about it is from the lithium mining. So because that is the main source of batteries at the moment for battery technology, it's lithium as a resource. So it's lithium miners to then the actual producers of the batteries themselves. So these are companies like the Chinese company BYD, who produce electric vehicles, but they also produce batteries as well. To companies like we've got Samsung SDI, LG Energy Solution, Panasonic. So these are companies that actually are producing the batteries. So, LG Energy Solutions is an interesting company. So they produce batteries for drones, ships, and they're basically in the process at the beginning of this year of building a $2.5 billion battery factory in the US with General Motors. So these are companies that will then partner with some of the largest car manufacturers to help support them. Then you've got companies essentially that are the car manufacturers. So again, a lot of focus gets put on Tesla. Now, granted, because of Elon Musk, he puts a tweet out, he's well known, Everyone thinks EVs, they think Tesla, and they've done a great job of that marketing element to it. But what people may not realize that it was in 2021, the most well sold, the highest sold electric vehicle in Europe was a Renault. It wasn't a Tesla, it was a Renault.
I don't know
So
that.
you have major car manufacturers that are now coming into this space because they're starting to realize, because of the government policy shift, they're starting to realize they need to shift themselves. They may be probably, I'd say, 5 years, 10 years behind Tesla in terms of technology. And it may not be, they may be sort of repurposing their petrol vehicles, putting a battery in, trying to work it out. It may not have the ludicrous mode. It may not have autopilot in the same way. So it may not get all the bells and whistles that you'll get with a Tesla, but they are cost-efficient electric vehicles that are for the masses. And so that is what some of these car manufacturers are doing. Volkswagen is a perfect example of that. So they were looking, and I've got the number here, they delivered just under 100,000 EVs by the end of March of this year, which is a 65% increase compared to the same period the previous year. So again, Volkswagen was a recent addition into the portfolio. So you've got the miners of lithium, you've got the producers of battery technology, you then have the application, so the car manufacturers. You then go down to the part of, what about charging infrastructure? So there's companies in there like SolarEdge. So SolarEdge is the biggest company in the solar panel retail market in the US. But with Joe Biden's big electrification push, he wants to basically build a charging network and infrastructure covering the entire country. There's no point in being able to incentivize consumers to buy electric vehicles if they can't charge their EVs at every point to get them from one side of the country to the other, something that Australia is probably lacking at the moment. So that's something there that SolarEdge is going to be a big supporter and a big success story because of that, their ability to enter that infrastructure market in terms of charging infrastructure. So that's the way in which we look at it. We sort of take a step back, look at the entire value chain. And within that, you're going to have exposure to many different types of companies. And you had up there the top holdings. And for people that don't know, from an ETF side, it's completely transparent. So the way in which we like to see it is we provide exposure to the underlying index, which is run by a company called Solactive. They're based out of Germany. But as a consumer, you can go on, you can see the entire holdings. That's just the top holdings. You can download that spreadsheet that you're hovering over there, and you can see everything from that perspective. And you see some Australian names, and most of the Australian names are the mining companies like Pilbara, etc. Alchem is in there as well. So you've got some of those bigger mining companies, and that's where the Australian exposure comes into it. And I think this is a key part. You mentioned what makes this different to some of the other thematics is that part. It is, you look at the underlying sectors. I don't know if you can bring that up, but the sector classification, apologies for making you keep jumping around. If you go down to that sector breakdown, you can see there, yes, consumer discretionary is a large proponent, but then it's also materials, industrials. IT is fourth on that list. And that, for a lot of people with technology in the name, they would just assume it's a tech play. It's really not. It's more than that.
Mate, I've had one good question come through from Jeremy. There's been so many good questions come through, actually. But Jeremy said, Kanish, I think we've spoken about this before. What's your take on the competition to lithium? As I think he's talking from the sources of energy, particularly hydrogen. Not necessarily in the shorter term, obviously, but like the longer term horizon from hydrogen.
Yeah, look, I can speak on this a little bit because we've obviously got a hydrogen ETF as well. So, from our perspective, hydrogen is a very good source of commercial transportation energy use. So from that perspective, it could be a great solution for that. So in terms of things like ships, trucks, even planes, you can't do that with lithium. Lithium has a really good case for the small vehicle element, and hydrogen does have a very strong case for the large commercial transportation case in terms of its use as a clean energy solution. The other thing with hydrogen, it has a very strong investment case as being an industrial energy source as well. The key part with hydrogen, it's been around and it's been used as an energy source for a number of decades. The part there is green hydrogen. So essentially creating hydrogen using renewable energy. So that is the big part that we're currently hoping that, you know, industries and governments really support, because that's where we'll see a strong potential case. But there is an ability for them to sit side by side. You know, I think that's the key part here. It's not one or the other. It's a complementary aspect to it. And for people to get to that net zero emission target, you know, whether we hit that or not, but even to stand a chance to do that, there will be an element of both these types of technology needs to be prevalent in society.
I see. That's a great answer, mate. I see a couple of questions come in around green hydrogen, and we know that Twiggy Forrest from Fortescue is really pushing, you know, Australia's position in green hydrogen as well. It actually just reminded me of something that I saw when you quoted facts about which markets dominate when it comes to lithium mining. Obviously, Australia and Chile, but there's another thing that China is actually one of the big, I guess, converters of the ore that we dig up and the brine that we dig up. Does a lot of the work around batteries and those types of things. So a lot of our natural resources still go into that destination, like a lot of our other resources are. In terms of, so obviously having you on the show to talk about the ETF side of things and how we can get exposure to this thematic is really important. So maybe I could just ask a question around portfolio construction. So you mentioned, you know, we've got miners, we've got like the storage technologies, we've got companies involved, we've got automobiles, all these different things. When you design an ETF around this, obviously you want to capture the best expression of that thing that you're trying to get exposure to. How did you go about creating the ACDC ETF from that perspective? So how do you weight the positions? Why did you choose to hold certain amounts in certain sectors? Like, can you explain that?
Yeah, so it's important to also remind people that as an ETF provider, we're a passive manager.
Yeah.
So we track an index. So Global X will not sit there on a day-to-day basis and decide, look, we should be buying more of Tesla and selling Renault and buying more of Volkswagen and selling, you know, Pilbara, whatever it may be. We look and track the index that we have chosen, and that's our job. Our job is to essentially make sure that the ETF as the vehicle implicitly tracks that index, and we have to track it 100%. And so our ETF, for example, tracks an index that's run by Sol Active, and that we look to have 100% full replication. So the stocks within that index, the exact weights, we simply track that. A key part on this, though, is when we're talking about product development, I think you and I have spoken about this before, but it does come back to the idea of research as a foundation, and Global X that is what they're most well known for as well, is having research for first and foremost. So first identifying the theme that we would like to take exposure to, or that we want exposure to. It's then going beyond that and speaking with many index managers. So there's many index companies that run indexes. I don't think people realize how many indexes there are in the world. There's millions of indexes and benchmarks that are available. And we work with index managers to identify what index do they have that provides the closest exposure to the theme that we're wanting to provide investors access to. Now, sometimes it will come to a point where the indexes that they already have off the shelf isn't the best case. And there may need to be, from our point of view, some nuances or some customization applied to that. And that is something that we then work with the index managers on. Now, in the case of ACDC, there was already an index that was around this thing, and it was by a sister company at the time, and we were able to leverage that. And that's how we were able to obtain the index at the time. But to give you an insight into of what's involved is we on a regular basis review the indexes, ensuring that they stay the course. Because in a mega trend ETF and a thematic ETF part there is it can change. And sometimes the indexes need to evolve as the underlying megatrend evolves. So what was occurring, and we found this, was some of the stocks that the index was giving exposure to was quite large, and the companies were quite small. So if you've got many ETFs that track an index, you've got all these ETFs, billions of dollars, that at the time when the index rebalances, and therefore the ETF has to replicate that. So that happens twice a year, by the way. Every 6 months, that index will rebalance, and the ETFs around the world that track that index replicate that. So whatever decisions that rules-based approach makes, we simply take that and we apply it. But then it gets to a point that what happens if we're buying too much of one company? Now that's a concern, because then that's a liquidity risk. Now that may not have been a concern 5 years ago or 7 years ago when this index was developed, but it is a concern now as the industry has grown, as the ETFs have grown. We have $500 million that track this ETF. There's an ETF overseas that has about $1 billion US that tracks the same index. And you've got two different ETF providers trying to buy or sell the same company. That's a concern from a liquidity side. So recently there was a consultation by the index manager that, as ETF providers, we then, lobby the index managers, say, these are things that are of concern to us, and the index managers do a public consultation to say, these are proposals to changes to the index. And that's what it does. So there's refinements that are constantly made. That's 5 years after we've started using this index. But that's a positive. To me, that's a positive, because it shows that we're being proactive to ensure that investors, we have their best interests at heart, because we want to minimize any liquidity risk. We don't want to not have the ability to buy or sell the underlying stock. So an example there is that there's a maximum ownership limit. So what that means is, of all the ETFs that track this index, the maximum of one company that they can hold is 7.5%. So we may hold 2%, and the ETF in Europe that tracks the same index may hold 5.5%, whatever it may be, but that's the maximum. And once it hits that hard limit, well, then there's no more of that company that we can buy. And that is a positive, because it shows that, one, we're limiting liquidity risk, but two, we're also minimizing our ability to move that company and move markets, which is the big concern for a lot of investors around ETF players and ETF issuers. So these are things that start to develop. There's also the idea of putting a negative ESG screen in place. So we had in our portfolio companies like Lockheed Martin, and Lockheed Martin are doing a lot of work with flow-based batteries. Now, with flow-based batteries, that is a type of battery technology that would be very useful in industrial use. But Lockheed Martin also has defense contracts, and we know what they're most well known for, which is the aircraft for the American military. Now, from a negative ESG screen, that makes sense then to screen them out. And so they were one of the cells once that ESG screen was applied. So these are the things that start to happen from a product development perspective. You have an idea, but research doesn't just stop with the start of that product. It continues, and there's constantly reviews, considerations that need to be made, and from our end, lobbying of the index managers that we then license the index off.
Yeah, one of the questions that came through just as you were explaining that, you may have already answered it, is from Jason, who says, do you quality assure selectives index selection? So do you have some sort of way to push back or to make suggestions?
Yeah, so that's that consultation. So we're in constant discussion with index managers, and I sit on the product development committee within Global X Australia, and that is something that we will continue to do. It's constantly making sure that the indexes are providing the exposure that we intend them to, and if not, why aren't they? And how can refinements, if needed, be made? Again, any refinement that needs to be made needs to be done under consultation, and it's public. So in this case, for the ACDC index, it was provided to the public for them to provide input on. All ETF managers that were tracking that index could provide input on that as well, which we did. And it's then up to the index committee for them to go through their due diligence process and do that. But there is that process in place. Naturally, you don't want to change indexes every week, every month. That's not our job, and we aren't active portfolio managers. We aren't stock pickers. But from a product development perspective, research, as I said, sits at that foundation. So making sure that it sits right, and it stays true to the theme that you want to provide investors exposure to. I think is the key part. Best of breed and pure play.
I'm conscious of time here, Kanish, but I might just get a couple of questions out. When we spoke in the past, I think it was about hydrogen. You mentioned that when an industry is emerging, so this is really important for anyone that buys thematic ETFs. When it comes to portfolio construction, how do you decide when an ETF should be equal weighted, so all of the positions are the same weighting in the portfolio, versus say like market cap weighted, or even things on like fundamental factors? Like what goes into making those decisions?
I think a key part around that is there's twofold. So if a thematic or an industry is mature, then you have an ability to potentially ensure you can look to the market cap weighted methodology, which essentially means the largest companies take the largest positions in the portfolio, and it basically is ranked on size. So I think of our semiconductor ETF as a good example on that. So the ticker is SEMI, SEMI. It looks at the semiconductor industry. Now that's an industry that's again been around for 30, 40 years, but it's very mature and very developed. The biggest players in that industry are the winners. It's very different to a greenfield investment opportunity such as hydrogen, where you have this element of a lot of disruption, a lot of innovation that's occurring. So that's a SEMI ETF there, but that's market cap weighted. So the largest holdings in that would be TSMC, trying to read that there, but AMD, Qualcomm, etc., Nvidia. That's going to be your largest holdings within a semiconductor ETF that's market cap weighted. If we did that as equal weight, that's not going to provide the exposure that investors want, because it's the companies like Intel, the companies like Qualcomm or AMD or TSMC that are doing the most capital reinvestment for R&D. It's not the smallest company in there, unfortunately. But you still want exposure to them, but not in the same way. There are weight limits, by the way, at the time of the rebalances, so that's something to be mindful of, but at least it's the 30 largest companies within that semiconductor industry. And then you look at hydrogen, for example, our HGen ETF, and that looked at it from two perspectives. It was the pure play and the non-pure play. So the pure play were companies that were involved in, say, the electrolyzers. So ITM is a UK company. They're the largest producer of electrolyzers. Now, for those that are looking at the green hydrogen space, you need electrolyzers. That's basically what produces from hydrogen, the conversion from water into hydrogen, but it's the use of that type of technology. Now, that concept is pure play and non-pure play, and then having an equal weight approach within that. Within ACDC, it's a combination of market cap, but also of an equal weight approach. So it's an element around this, which is depending upon the theme, depending upon the industry, there will be differences of how you view it.
Yeah, because I imagine, like, depending on some like mining companies, for example, if they made their way into the index, they could be massive. Same with some automobile companies that, like Tesla, like it's like one of the biggest companies in the world, right? So, but that's not 100% exposed to renewable energy, right? So,
no, and that's the thing. So the key part around how ACDC actually works is it uses two underlying databases to source its universe to then get a portfolio of what is now 33 names. So the two universes it uses is a Clean Horizons energy storage source, which is essentially big, broad, battery-grade storage companies. So companies that we've spoken about. So just because a company is producing electric vehicles doesn't mean it should be in the portfolio. I think that's a key part. It has to be involved in some form of battery production and battery storage solutions. And then on the miner side, it's battery-grade lithium companies as well. So we'd get questions around, companies such as BHP or Rio or whatever it may be. Yes, they've probably got some lithium mine exposure, but is it significant enough that they would be classified as a battery-grade lithium miner? And unfortunately, they're not. They're iron ore producers or whatever they may be. So, in the same way, Fortescue does not feature in our hydrogen ETF because, one, they don't pass the ESG screen, to be honest. But two, they're green hydrogen projects that run is a very, very small part of their current revenue stream.
I might just ask two questions, just if I can get you to give me like a bit of a quick fire on these. One was from Jeremy, which is how does the ESG screening, how's that influencing company selections in the index, specifically for ACDC?
Yeah, so essentially it screens out companies based on fossil fuel production, the UN Global Compact violations, weapons manufacturing, and tobacco. So to be honest, we're not going to see many companies excluded because of tobacco. It's really around the fossil fuel production, which will be some of those mining companies. And again, we actually didn't see any mining companies actually be filtered out because of that. It was the weapons manufacturing that filtered out two companies in particular, being Lockheed Martin and Rolls-Royce. Both companies that were in the portfolio previously, but because of that weapons element to it, defense contracts, etc., they were filtered out of the portfolio. It's just having in place something to go, again, this is providing exposure to battery technology and lithium mining, and very conscious to try and ensure that it provide the best of breed product.
I can't imagine there'd be too many tobacco/lithium companies in the world, but maybe they take all the profits from tobacco and put it into lithium. So I got one extra question here, which is just a quick one from me. So we've got a lot of questions come through, people asking things like, what do you think of this company? What do you think of this company? And that's a good question for me to answer, or for the CEOs if we can get them on the show.
Yeah.
But I might just ask you again from an ETF perspective, is a lot of people find industries like this really exciting, and they think to themselves, well, hey, I can go and buy Pilbara Minerals, I can go and buy BMW stock directly. What do you think about, I guess, the differences, pros and cons of going it like alone and buying individual stocks versus using an ETF?
So I think a key part from my perspective of why I find ETFs are becoming more well used by investors around the world versus some single stock. And there's no right or wrong here, because it's depending upon the investor and depending upon what you want your exposure to be. So we need to be really clear on that. But what does the ETF provide? Well, the ETF provides diversification in a single trade. So you get exposure to 33 companies that are linked to the thematic of battery technology and lithium mining in one single trade. And that trade is also on the Australian Stock Exchange. So very easy, very cost efficient for an Australian investor to go, well, if I want that thematic, I want that exposure, how do I do it? I can do that by jumping on my Selfwealth account and buying ACDC or whatever it may be. Now, if you wanted to go down the path of single stocks, well, from an Australian perspective, you're very limited, unfortunately, in terms of battery technology companies. I think there may be some very sort of micro and small cap companies that may be sort of there, but you are very limited. You obviously have the large lithium miners that you can get exposure to, but then so you have to go outside of that. So then you have to go offshore markets. Now, again, you can do that through your trading accounts, but do you know enough about BMW to take a position in it? Or BMW versus Renault, which one should I do? LG Chem, Samsung SDI, or Panasonic. These are companies that are now listed in Taiwan, Korea, Japan. Do you have access or exposure to those markets? You may or may not. Is the cost of trading in those markets, how significant is that? Do you need to be up during those market hours to trade those? These are all questions that if you're happy to go down that path, then that's fine. But I guess the idea is that by one trade, you can get exposure to many different countries, companies listed around the world, and companies that are involved within that thematic. And that's where we would like to sort of, from our end, say, we want to provide the purest play in the best of breed. And that's really important with thematic ETFs, because you need to lift up that bonnet, make sure that the stocks that are within the portfolio represent the thing. Just because our ETF has battery tech and lithium in its name doesn't mean that you should trust that name. You need to do your research and do that work and actually go, okay, what does these companies represent? and be comfortable to know that these companies represent exposure to that thematic. But I think to your point as well, there are a lot of clients, investment professionals that I speak to and that the team speaks to, that would actually, some of them complement each other. So you have some investors that will take some single stocks, but for that core exposure to this thematic, they may take the ETF and they may complement it with some other single stock exposures. Again, it's diversification is the fundamental root of the benefit of it.
Yeah, it's really interesting, Kanish, because I find when it comes to the easiest way to think about diversification in investing is you can't do worse than your worst investment and you can't do better than your best investment. So if you're diversified, you're going to be somewhere between that, right? And so by taking this approach, sure, you might not get the thing that goes up 50,000% in 5 years, but you're probably going to avoid all of the other companies that go to zero. So I think that's kind of an ETF. If you want that exposure, you said you can. It's not necessarily a case if this or that. It can be like both of them. Like you can and them together, so you can have this and that, and that's worth pointing out too, mate. So that's about all we've got time for, Kanish. There was one cheeky question that did come through from Jeremy, who said, any chance of a discounted fee for investing in Global X ETFs for Rask and Selfwealth viewers? But that was a tongue-in-cheek comment. I thought he was talking about your top there. I thought maybe we could get a Global X T there. That'd be quite nice. But mate, Kanish, thanks for joining us on the show. I know everyone can go to globalx.com.au. We'll put a link in the show notes. globalxetfs.com.au.
Yeah.
You find all of the information that I was looking at tonight. You can also find out more about the company and what's going on there. But Kanish, thanks for taking some time to join us all on the program tonight.
No, thanks for having me. And yeah, on that website as well, there's a lot of insights, a lot of research there, especially around this space. So yeah, jump on and click on the insights section.
Yeah, plenty of white papers and plenty of research from the team. So Kanish, mate, have a wonderful night. Thanks for joining us, and I'll see you next time.
Thanks, mate.
So that was Kanish Chugh. We're always, I think I might have cut him off just a bit quickly there, but Kanish is always a wonderful resource to have on the show. So really appreciate him taking the time. Now that we've got about 5 to 10 minutes left, I do have a few little things. I'm hoping Alex can drop into the chat a poll, just a very cheeky poll, just to say, have you subscribed to Selfwealth Live yet? If not, you've got to confess. Why not? Every Wednesday we go live at 6 p.m. So that's the number one metric we look at. And I can see that according to this first poll that we've done, ACDC wins the award for the most, the best ticker symbol on the ASX, which I think it is, to be honest. I like HACK, the cybersecurity ETF, but ACDC has the Australian connection and works with the thematic. So, that would be my vote too. So for tonight, we're going to mix it up a little bit. I'll bring up my presentation, and we do have. I wanted to just quickly bring in, because I was on a television program today, and I was mentioning some companies. Everyone wants to know which companies I would invest in, and those types of things. So I thought I'd bring up two companies that we've spoken about on the show before, just for everyone that wants to change it up a little bit. These two companies I've spoken about quite at length. The first is Xero. XRO is the ticker symbol. And just so you know, when I talk about these companies, I don't necessarily mean these are companies that I'm actively buying each and every day or something like that. I just mean they're really interesting companies. And I think as we look out over, the next 5 to 10 years, I think in the short term, in the next 1 to 2 years, I think what we'll see is we'll see a lot more volatility. We'll see a lot more ups and downs because, we're seeing some really high inflation overseas, some really tough economic environments. And those things tend to play out on the stock market in the form of causing volatility, causing uncertainty. But what it can also do is it can also throw up opportunities to invest in companies that you might not otherwise get the opportunity to invest in. And so when it comes to, times like now where the market is extremely volatile, personally, what I like to do is I like to make a list of all the companies that I've wanted to buy for a long time, but couldn't justify buying. And so I've held Xero shares since I originally bought them when they're about $14 or $15, but I later sold them, then I bought them back. And my valuation for the company is between $75 and $90 per share. So they're around about fairly valued now. Remember that Xero is the global software company that does accounting software, and it does it for about $60 a month, which is, I think, still very cheap. I think they could increase prices many times over before people really start to give it up. The key risks to Xero are probably in the UK, where the economy is under a lot of pressure, but also competition from the likes of Intuit, which owns QuickBooks, and Sage in the UK. Sage is the incumbent. It's not a very good business, to be honest. Well, it's getting better, but it's a business that has struggled recently. So both, I think Intuit and Xero are both great companies, but for the Australian/Kiwi connection, I do like Xero. As for the other company, and I can see, Eve, you said Xero dropped a lot today. I put it in an order, but it did not fill. So I think that's one of the things that happen when we put in our buy orders. Sometimes the stock can drop through that or momentarily drop below it and then bounce back up. For really volatile companies, I remember there was a time in Xero's history, Eve, if you go right back here, and I remember talking about to Stuart, who's in the chat tonight. I remember talking to him about this company many years ago, and when Xero first come to the stock exchange, it rose to I think it was about $40 a share, $42 a share. And then it fell to $14 and stayed below 42 until many, many years down the track. So sometimes that's what happens in investing. So keep that in the back of your mind. North Star, you've asked, is Square a competitor to Xero? Not at this time. Not at this time, North Star, because Square, which is the new name is Block, Square does the point of sale terminals. And I could see Square moving into this space, to be honest, because they do basically everything from a payments perspective for restaurants and cafes and those types of businesses. And so I can see them moving into the space of HR and accounting more and more and more. But at the moment, Xero still wins. So there's a lot of competition around, but Xero's still the kind of leader in this space. So the other company, which I will quickly bring on, and the company is Altium, a company that does the software to design these little circuit boards. Another company that I've followed for many, many, many years, and Altium ticket symbol is ALU. And this company last year knocked back a takeover offer for $38 a share, and it's now $35. So it knocked back that offer. The shares fell, and I thought management were a little bit overconfident at the time because the company wasn't going that well at the time. But since over the past year, the company's really bounced back. And the thing that I really like about Altium is it's kind of at the intersection of engineering software and the Internet of Things. So where things are becoming more connected, whether it's in the workplace, in the manufacturing site. To put it in perspective, engineers and designers would use Altium software to design things like washing machines or kettles or things like that. So all those different types of things. Martin, you said Xero to buy Block. I think it would be the other way around, Martin, unless Block has fallen that far, which I highly doubt. So Xero, how big is Xero these days? $12 billion. How big is Block? Still got to be massive, surely. So it says here 11.9 billion. Oh no, here we go, 32 billion. I was going to say 32.5 billion. So Block, it would have to be a reverse takeover, Martin, unless you said that tongue in cheek. It's a bit of fun. There's Jason, you said you bought Xero at $111. Yeah, I mean, I can't remember my last parcel, but it was pretty high as well. And Jeremy said you got Australian Ethical at $12. Australian Ethical, obviously Australia's leader in ethical superannuation funds. You can see that's come back a long way. And it just comes back to, valuation at the end of the day too. So, so those are my two companies. If I was going to put two companies on my wish list today, it would be Xero, and I would be looking to see how well it does in the UK and in particular Canada. So I brought this up a few weeks ago on the program, but in the UK, the government is mandating basically every business has to start doing their accounting via a digital platform like Sage, Xero, or Intuit. So there's a huge kind of like firecracker behind the industry, and it's just shooting up into the air. And same with Altium. More businesses, global businesses, are choosing Altium's cloud-based design software because it can be used from anywhere by any team around the world. The key risk here is basically like China, what happens with trade relations, because there is still a lot of obviously manufacturing that goes on in China, but also a lot of users of Altium software. Okay, so I've actually got something different for everyone tonight, and I'll be very quick. In the lead up to tonight's show, we thought we'd do something a little bit different to the top 5 most bought and the top 5 most sold inside Selfwealth. I'm going to mix it up a bit just for this 1 week, and I've actually got 1, 2, 3, 4. I've got 4 value investor programs to give away. And we're going to give 4 winners some free trades inside Selfwealth. So we've got 4 winners. We'll try and limit it to, you can only be the winner once, so you can't have more than 1 win. But what we're going to do is a little bit of trivia. And the trivia, I'm basically going to ask you, who am I? So that's the first thing. I'm going to ask you, who am I? And there's going to be a picture of someone shown on the screen. But I'm also going to ask you how these people made their money. And if you give me the first answer, the most correct answer, I will award you the prize. And all you've got to do to enter this bit of fun competition is just put your answer in the live chat. And it's first in, best dressed in this case, and you will win a value investor program or some free trades on Selfwealth. All you've got to do if you win is send us an email, marketing@selfwealth.com.au, and just send a screenshot of your YouTube, being logged into YouTube, so that we can see that you are indeed the owner of that YouTube account. So, as I said, be ready. They're going to be pretty quick. I think a lot of people are going to jump onto these really quick. And the questions are pretty straightforward, and they use some characters that you may know as well as some that you may not know. So I hope we all understand the rules. I am a little bit ahead of you I'm about 5 seconds ahead of you in terms of the delay, and that's not for any swearing or bleeping out of words. It's just the internet connection. So I'm going to award the winners based on the first thing that I see in the chat. So let's share my screen here, and I'm going to try and do it. Okay, here we go. So the first question is this one. How did the artist, the singer, the rapper, the producer, known as Dr. Dre, how did he make most of his money? So I just need the name of whatever the thing is, whatever the thing that he did. Yes. Okay. So Jason, you got it straight away. Beats headphones. So I can see a lot of people guess this straight away. Paul guessed cosmetics. Not quite cosmetics, but Dr. Dre made $600 million in a single year. So Jason, you were quick on the keyboard with this one. He made $600 million by selling his share of the Beats by Dre headphones straight into Apple. And Apple bought it, and they've since created different types of headphones. You can see these ones here, but they've created the different types of headphones. Stuart, you've said they are crap headphones too. Come on, Stu. Come on. Jason, yes, you won at last. No randomness involved in this one, just straight up guessing the product. Okay, let's get to the next one. So Jason, you will need to email us marketing@selfwealth.com.au. The next one, and I think everyone's going to get this. How did Oprah make most of her $3.5 billion of net worth? So $3.5 billion. I'm looking for the name of the thing that got her most of that money. If you want to, you've got to basically tell me what it is that made her the money. Okay, so I think, and Eve, it looks like you got it. Danica was the one who spelt it correctly, but Eve, it looks like you got it first, which is Harpo Studios. Stuart, you've said the Oprah Winfrey Show, RBT Cat, Oprah Winfrey Show. So Oprah didn't actually make most of her money necessarily from the TV show. She actually made most of her money from Harpo Studios. It's an interesting story. And one thing that people don't really know is Oprah's name was actually Orpah, Orpah, Orpah. But everyone just spelt it as Oprah, so that's what she went with. And what's interesting is when she originally started with the Oprah Winfrey Show, she was making, I think at the time, about $500,000 a year. And she thought that was fantastic, and she was running with that. But the production company basically was making 99% of the money. And so what actually had happened is she met a lawyer who said, you should go back and get royalties and ask for 4%. Ask for 4%. And when she went back to the company said no. They said flat out, no, you're done. You're not, no more. And so what Oprah did with her lawyer is they actually went and bought 2 acres of property and created Harpo Studios on that property and said, well, I'm the most valuable asset. I'm going to create this company and we're going to do it here. And Eve, you said you learned that from the Australian Business Podcast. Ah, fantastic. Well done, Eve. And so she went and built the studio and built the production facilities. And then what actually had ended up is the other company ended up paying Oprah for the show. So the company that she was trying to bargain with ended up paying her a licensing fee to do the show. And she went on to have her own TV channel and all different other types of things. Okay, so I've got 2 more things for you. And these are very, very quick, but they're going to be hard. I'm not going to lie. These are a bit harder. So you may not know who these are. So I don't know how you'd even find the answer to some of these next 2 things, but I'm going to be quick. Who is this? G'day, Matthew. Welcome to Selfwealth Live. Who is this? And while you just try and think about that for a sec, I will let you think it over. And if anyone, Jeremy says, anyone else trying to expand their screen to see what the next one is? Stevie says, my dad. Paul says, no idea. It's not Michael Bloomberg. We're going to have to keep guessing. He looks familiar, says Plan Your Lift. Stevie's dad, not quite Jeremy. Young Warren Buffett, lol. No. So who is it? Who is this next? Who is this person on the screen right here in front of you? And the person, if I'll give us maybe another 10 seconds, and if no one can guess it, we'll just donate the prizes for tonight to next week. Not Bogle, Stevie. So this is by far the hardest one that's on the show tonight, just so you know. So, okay, so I'll give it to you. This person is a guy by the name of Chuck Akra. He is one of the best performing investors over the past 40, 50 years in the United States. I'll see if I can get up his website. Let me see if I've got this here. And I cannot see it. I'll just see. Let's have a quick look here. Here we go. So this is him right here. He is American. That is fair to say. So my neighbor, says Jason. So it's just, if you go ahead, and there's actually a podcast on Invest Like the Best. If you look at the podcast series Invest Like the Best, and you hear the story of Chuck, it's actually incredible the way he has built the business and how he has gone about creating money. And some of the things that, sorry, Colin, you're right, yeah. And some of the things that they've done include holding companies for like 20 or 30 years. So they've held on to their investments for an incredibly long period of time. And that's what makes it so special, and what the business that they've created so special. So that's, photos don't match. Yeah, I didn't get it off this photo off here. I got the photo off Barron's, I think it was. So the last one, and I think you're going to have to be quick with this one. I'm going to just chuck it straight in here. Who is this? Who is this person right here? You've got to tell me. Yeah, Rebecca, you guessed Rothschild. Plenty of leeway on my pronunciations. Okay, it looks like heaps of people got in straight away. But Sally, you are the winner. Sally, you are the winner. This is Kathy Wood from ARK Invest. Kathy Wood, like a beacon for high growth investing. So Kathy Wood is the one, and she's most well known for investing in really high, what you call high technology companies, life sciences companies, companies that are really kind of like more like venture capital companies that are on the stock market. And she's, copped a lot of criticism recently because she's her fund. It's actually an ETF, and I'll see if I can get it up in here. The ARK Innovation ETF. This ETF has really just fallen off a long way since late last year or early last year. It's fallen a long way, and that's because all the companies inside the ETF are really high growth. So, yep, as Alex says, Jason, Eve, and Sally, please make sure you email marketing@selfwealth.com.au. And as for my final quote for the evening, this one comes from Walter Schloss. I was about to stuff it up again. And if you don't know who Walter is one of the disciples that trained alongside Warren Buffett. And remarkable track record. He passed away in 2012. So this is one of the investors that kind of grew up with Charlie Munger and Warren Buffett. And there's this quote that he has, which is that Warren is right for Warren, but not for me. And the reason that I bring this up is as we go into a period where we probably see some more volatility in the stock market, and we see some companies that we thought were going to do really well probably don't do really well, and we're going to see some different types of businesses do well. What's really important is that you just understand your limitations and you understand what you want to do with your money. If someone is doing something else, let them go and do it. If someone is investing in cigarette companies, let them go do it. If someone's investing in iron ore companies, let them go and do it. If someone's using ETFs, let them go and do it. You don't have to do that. You don't have to be everything to everyone. And this quote is about making sure that you stay within your own lane, whatever your own lane is. Stick to your process, get better at what you're doing, and just go from there. Paul, you said, Selfwealth, one day you will say my name. I live in hope. And I can see my first live. Love your work, mate. Well, thank you, Piston. Thank you. I really do appreciate that. Because no one won the third prize, the top two answers should win for Kathy Woods. Okay, sure. Why don't we do that, Stevie? That's a good one. I'm guessing were you up there? Were you up there at number two? I see. So the two winners of Kathy Wood were Sally M and North Star 004. If you want to write into us, please let us know. Andy, you've said, thanks again, Owen. Just a note, I have been subscribed, but don't always get channel notifications. Not sure if it's an issue on my end. So what you can do, Andy, is you can download the YouTube app on your phone, and the YouTube app should tell you. You can set up notifications to know that when we go live, it will say they've gone live. Otherwise, you'll get an email from Selfwealth or from Rask. So, yeah, that's how you do it. But we'll be back next week, next Wednesday. If you do have anyone that you want us to interview, please drop it in the chat now. I've tried to reach out to a few different CEOs. I've had a few of you reach out to me and say, hey, I'd love to see this person on the show or this person. I think it's next week or the week after, we actually have Robert Miller from NAOS, who's specializes in private companies and high growth companies on the ASX. So he'll be on to share a couple of companies with us, to share companies that he's got on his radar, so then we can put them on our radar. Bank up your high growth questions for Robert, and we'll be doing all that. I didn't get an email today, says Caroline. Caroline, you should have. Apologies for that if it didn't go to the right folder. Thank you to Kanish, who joined us for tonight. Thank you to Alex, who was behind the keyboard with me. And thank you all for coming along. We're going to have some great guests coming up on the program over the next few months. And we've got some great topics. So send them to us. Hashtag Selfwealth Live if you're on social media. And that's it for tonight. Remember, it's a pretty, there's a lot of pessimism out there at the moment, but over 122 years, 81% of the years are positive and 19% of them have been negative. You get some bad years, you get some good years in investing. We're here for the long term. So thank you, everyone. Have a wonderful night, and we'll see you next Wednesday, 6 p.m., same time,